Hi there. In this video, I would like to show you a brand new feature that we just released inside the TanukiTrade chart view. My name is Gery and I'm the Chief Options Expert at TanukiTrade. This is a pretty big upgrade. In my previous video about the GEX Live chart, we looked at the 3 option metric columns and how this data can help you understand the market positioning. And today I would like to take it further and show you how you can visually see the most important metrics on the chart with horizontal lines in here. So actually we turn the raw data into a visual map of the market, which is much easier to understand than looking at the bars on the right and on the left side in these columns. So right now what we are looking at is the QQQ on the March 20th expiration, which is tomorrow's weekly expiration. And right now I am recording this before the market is open, and since our updates are only at 6:30 a.m. Eastern time, and I'm recording this at 4 a.m. New York time, that's why the underlying price will not update during the recording of this video, but we don't need to have it updated just to explain all the features that you can see on the chart. To have more space on the screen, I can minimize this upper bar in here where you can select the expirations. But one more note about the expirations. If you click on key only, it will only show you the most important expirations. If you disable it, it will show you all the expirations. And going back to key only, the highest gray bar will always show you where the highest net GEX impact is across the expiration. So what we can see here, it's also labeled with a little star. So we can also see that the highest net GEX impact for QQQ is this Friday's weekly standard expiration. So having more space on the chart, I can minimize the upper bar. So right now what we are seeing, the March 20th expiration for QQQ, and on the time frame I selected 1 hour. You can always select 4 hour, 1 day, it depends on what you trade and how you trade. The option metrics in the columns and on the chart are updated based on the expiration. So if you click any of these expirations, the lines and the metrics will update based on the expiration selected. And during the market open time, we also update the metrics every single minute. And the underlying price is a streaming price. Right now it's not moving because I'm recording it before the update starts at 6:30 Eastern time. Now let's see how you can control these new settings. Click on the GEX level and chart settings and it will pop up a right panel that you can see here. We have also introduced presets where you can click on minima that will show you the minimally important visual labels on the chart or levels, the balanced and everything. And you can also customize each and everything that you want to see. To have a better understanding of the visuals, we need to think about in 4 layers. The first layer is the volatility regime. The second layer is the GEX levels. The third layer is the positioning data, which is the open interest. And the fourth layer is the volume, which is the flow. These levels can be controlled with these settings. So if we go back to the, for example, the minimal one, what you are also accustomed to in our previous versions is that you see the highest call vol, the highest put vol, and also the high volatility level. If you only want to see this as a legacy or previous version, you can disable everything with the minimal setting and you only see these labels and also the call transition and put transition zone. If you want to see more, by default, everything is enabled on the chart. If it's too much for you, you can customize it to your own need. Now let's go back to the secondary gamma wall, and by default we show 5 secondary gamma walls. These are the gamma walls beyond the C1 and beyond the P1. So if we are looking at the gamma walls, you can also see the C2, which is the second highest call GEX on the upside and the third highest call GEX. In the same manner, you see the P2, the second highest put GEX on the downside, and the P3, the third highest put gamma wall on the downside. The 3 most important gamma walls or gamma levels are always shown on the right side of the chart, and the least important ones, the C4, C5, and C6, are always shown on the left side of the chart. So here you can see the upper core walls that are beyond the C3, and also the P4 and P6 and also the P5 somewhere down there. So these are the orders of the gamma levels on the chart. If you are not interested with the very minuscule versions, like for example, the P6, you can, just change it to showing 2 levels, 2 gamma walls on the chart if you are interested with that. So you can customize it the way you want to see these levels. If it's too noisy for you, you can disable these walls completely, or you can customize how many secondary gamma walls you want to see. Please remember that the C1 and P1 and HVR will always be shown on the chart. These are the primary levels, and you cannot disable it, and it doesn't make sense to disable these ones. So going back to this, you can, again, customize it to your needs. Now let's talk about the absolute GEX. The absolute GEX values are the biggest GEX values where the puts and the call together are the absolute biggest one on the chart. You can always verify these lines if you select the corresponding metric on these columns. For example, right now we are talking about the absolute GEX. Now on the metric you see that the highest absolute GEX is this strike. And this is what also tells you with this label, because EB1 is the highest absolute GEX. This is an abbreviation, you will understand later when we click on these labels. But right now what I wanted to show you how the settings are in here. So if you are only interested with the first absolute GEX, you can downgrade it to 1, and then it will only show the EB1, the first one. If you are interested in EB2, you can also see the EB2. This is the second absolute highest GEX level, and you can also verify it by looking at the bar on the right side if you select the corresponding metric on the right side in the columns. Going back to the chart settings, you can also control if you want to see the open interest labels. The open interest labels are always shown in yellow. This is purple and this is blue. So the open interest labels are here, absolute open interest and put open interest, and the net put open interest. So the yellow labels are for open interest. If you also want to verify the open interest, you can switch here, for example, the absolute OE, and you will see that the absolute open interest shown in this 600 level is here, because that's the biggest gray bar in this distribution. So this is how you can easily visually see on the chart, instead of looking at the bars, where the absolute highest open interest is. And that is the reason we wanted to have this upgrade, because we thought that these bars are helpful, but looking at the chart and visualizing these most important bars on the chart makes it much more visual, and you see where the important levels are on the chart. Going back to the chart settings, you can also disable and enable the volume. The volume is always shown in this kind of color. The call volume, the put volume, net call volume, and net put volume. What are the differences? You can go back and verify that as well. So let's see the net OE, not net OE, but net volume, and the detailed volume. Here you can see that the net volume, the highest net volume, net put volume, is here 590, and this is what is exactly shown in this label. The net put volume is depicted in here, which tells you that the highest put volume was at 590 yesterday, because right now I'm recording it before the market is open, so the volume data is obviously from yesterday. And what is the highest put volume? The highest put volume is here. And this is different because the net put volume was at 590, but the highest single put volume was at 600. And you can also see that the highest call volume was at 600 as well, because if you compare these little green bars, you will see that this one is the highest call volume across every single strike at this expiration. I have just accidentally discovered that I left the March 27 expiration when I clicked around all the expirations. But it doesn't matter, we can go back to March 20 and analyze that as well. For example, if I click on March 20, we will see, going back to the volume analysis, that the highest call volume was at 600, because it tells you the CV is here. And the call volume is, you can see with this green bar, the highest call volume was here. The highest net call volume was here. And the highest put volume is, interestingly, way above the market currently, the 620. Now that's a very interesting observation because the 620 is way above the market price, but there was the highest net put volume and the highest single put volume there. You can verify these data looking at the metrics on the right side if you select the right metric in the columns. So going back to the chart settings, what we can also enable and disable is the delta exposure. Right now what you can see is the highest negative delta exposure is here at this 600 level, and the highest positive delta exposure is pretty way down at this level, the 570. If you want to zoom out and see all the levels, for example, if you are in a low time frame, you can do it by clicking here on this y-axis, and then you can zoom in, and if you double click it, it will reset to the standard one, but you can always zoom in and zoom out to see different levels if you are, for example, trading 15 minutes or 1 hour or 4 hours, it depending on the time frame selection of the chart. So going back to the chart settings, what you can also control in here is the relative size filtering. The relative size filtering makes it easy to filter out levels that are not very important. So for example, if we are going back to the net GEX metric, for example, you don't want to see very small minuscule levels like P4 or P5. You can just outright disable them in here, or you set the relative size filtering, for example, to 50%, which is pretty very strong filtering. We are explaining there. And then you don't see the levels that are relatively smaller than 50% of the biggest one. This one is the biggest one. And for example, this is probably lower than 50%. That's why it's not shown as a horizontal line in here. So if you don't want to see very low levels or very small size compared to the relative size of the biggest one, you can filter those levels out in here. If you click on everything, it will not filter anything out. If you click on balanced, it will filter out 25%. And then you can, for example, enable volume delta exposure if you want to see that. Now let's talk about the zone coloring, which is also very important. We have different colors for different zones. You can see that those are enabled by default, like the positive gamma profile, transition, negative gamma, and extension. Right now what we can see on the chart based on the GEX profile, that there is a call transition and put transition zone. This is the call transition and put transition zone here, showing you in a blue color. Red color is showing you the area where we are below the put transition, where there are only negative GEX levels in here until the P1. Below the P1, we are showing the negative gamma zone extension level. And correspondingly, above the HVL line, you see the C1 until the C1, and above the CT, the call transition, you see green labels or green zone shading, and above that the extension zone. You can also disable these, for example, if you don't want to see the gamma extension, if you don't want to see the transition zone, you can disable all of them, and then it will purely only show you the most important levels. But I guess it's pretty useful to see these coloring of the different areas. The level analysis drawer you can disable and enable, and this comes next. So if you are lost with the naming and what these labels mean, you can always click on any of these labels. If you hover over it, it will give you a short explanation. But if you click on it, another panel on the right side will appear with the level analysis and the zone context analysis. If you click on a label, it will explain what the label means. And it will also tell you the zone context analysis. And it will explain what the positive gamma zones are, where is it exactly on this expiration, on this underlying, and where is the positive gamma zone. If you want to disable this setting, you can do it by clicking here, disable, and then going back to the chart. If you click on it, it will not come up, but I guess this is a very important and handy feature, so by default it's enabled. If you hover over this chart setting, you will see which of the levels or labels are hidden and which one are shown on the chart in here. Going back to the levels, these are all the settings that you need to know about based on the secondary levels and this visualization. So for example, if you click on this line, any of these labels here, you will see a very high explanation in here, because this level is a pretty big confluence. What we call a confluence is where different metrics line up on the same strike. For example, this one is a pretty big confluence because 7 levels converge. That's why we are saying exceptional confluence. And here you can also understand each and every label that you see on the chart. For example, the lower transition, the highest absolute gamma, the second put side gamma wall, the highest call open interest, and the rest. So whenever you are lost with the meaning of these labels, just click on them and it will explain it to you in the level analysis. And it will also give you a general overview of the context analysis regarding the zone. So again, what I mentioned in the beginning of the video, it's important to think about 4 layers. The first one is the volatility regime. The second is the GEX levels. The third is the positioning. And the fourth is the flow. The first one is always understanding what volatility regime we are trading in. Right now we are trading below the HVL line, which means that we are in a negative GEX zone, negative gamma territory, where the market and the volatility tends to be higher than above the HVL line when we are trading in a positive gamma environment. So that's the first thing that you need to understand, the volatility regime that you are trading in. The second one is to understand when the most important GEX levels, the C1, P1, P2, and the rest are on this time frame, on this expiration. Third one is the positioning. Where is the most confluenced positioning on the chart? This is what is shown for you in the open interest levels. And the fourth one is the volume, where the activity takes place in the current marketplace. Obviously, it's yesterday's volume because I'm recording it pre-market. But these are the 4 things that you need to watch on the chart. Once again, the volatility regime. Are we above the HVL or below the HVL? The GEX levels, where are the most important zones on the chart? The option positioning, where are the highest open interest based on calls and puts and absolute open interest? And the fourth one, where is the activity? Where is the biggest volume? Regarding the volume and the other secondary metrics, it's also important to understand that on the chart, we are only visualizing the most important levels. So for example, regarding the net volume or the detailed volume, we only show you the call volume, the highest one, the highest put volume, highest net put volume, and the other one. So if you want to see the current or actual volume distribution, you can always do it by selecting it in the option metric column, because here you can see the highest bar is easy to see, but you can also see the secondary volume levels that are not shown on the chart, because on the chart we only visualize the most important levels or the most important areas or values in terms of volume, the open interest, and the rest, because otherwise it would be a very, very messy and confusing chart. So whenever you want to see the more detailed volume distribution or more detailed open interest distribution, you can always select the metric on these columns and see it for yourself. Otherwise, the most important levels, the biggest ones that you need to pay attention on, are always shown on the chart with a visual horizontal representation that you can always go back and enable, disable, customize based on your needs or analysis purposes. It's also important to realize that this visualization is not just a bunch of random lines. It's a multi-layered map of the options market. Each level on the chart has a different role, and the level matters because of where it sits inside the structure. I guess that is the real value of this feature. It helps you move from simple level reading to deeper structure reading and how the market is currently positioned around different options metrics. I also mentioned it in my previous videos, but it's important to reiterate here. These levels are not trading signals. These are not directional signals. These are not predictions. So for example, if you see a P1 here, it does not predict that the market will go down here. It's just a level, it's just a reaction that you need to pay attention on when you are trading it. And based on your current and your subjective analysis of the market, you need to watch for the momentum and then make your own decision. These are levels, these are zones, reaction zones in the market that are important to see and understand during your trading. And based on your own current analysis, you make your own decision. What I would recommend is always watch for the highest confluence levels on the chart, because I guess these are the most important levels that you have to pay attention, and then it might help your trading decisions based on your own trading strategy. Now, to have a little more practice regarding the application of these visuals, let's switch to SPX. And this March 20 is a good expiration. This is tomorrow. Now let's go through all the 4 layers of thinking that I was talking about. First one, volatility regime. Where are we on the chart? We are below the HVL line, and we are in a red shaded area, which means that we are in a negative GEX territory. In this territory, the market tends to move more erratic. The volatility tends to be higher. Now, the second thing to understand, where are the most important GEX levels on this expiration, March 20. The first biggest one, put wall, is the 6600. We are very close to that one. The second biggest one, if the market breaks that, is this level, the 6500, which is also, if we click on the 1-day time frame, is a very big one in terms of the technical levels in here. This is a pretty big support level, but if we go back to 1 hour chart, we can see that the 6500, the second put wall, and the third put wall is just above the market, which is not as important as the P1 and the P2. And if we are looking on the upside, what we can see that this is a pretty small or narrow zone on the upside above the HVS. So right now what we can see that the market is pretty bearish in terms of the positioning and in terms of the net GEX. So this was the second layer that we need to think about. The third one is the positioning. Where is the biggest open interest and how it is distributed? So if we go back to net open interest, and I also wanted to see the detailed open interest, what we can see that the highest call open interest on this time frame is still 7,000. So I guess that many people bought the 7,000 call strike previously a couple of weeks or months ago, and they will all lose if the market will not jump back in a day for 7,000, which is pretty unlikely. But still, the highest net call open interest is at 7,000. And if we zoom out from this view, let's go back to 1 day, we can also see that these levels are pretty far the other open interest. You can see that the 6,000 has the highest net put open interest. You can see here with the biggest red bar, the highest call open interest in and of itself, the highest put open interest in and of itself, and the highest absolute OI. So if we, for example, change the net OI to absolute OI, you will see that this is by far the biggest gray bar in here in terms of the distribution. So the 7,000 and the 6,000 is positioned by far the biggest ones in terms of absolute OI. And the other one, if you look at the detailed OI here, these are the biggest positioning. So people who are positioned at 6,000 in terms of, for example, protective put, they will all lose. If the market will not, drop 600 points in 1 day, they will all lose. The people who are already positioned with call open interest and they bought the calls, they will make money. Anyway, these are the biggest open interest distributions if you want to see the positioning on the underlying. And the fourth layer is the flow, the volume. Where was the biggest volume yesterday? The net volume. Let's consult the net volume and the detailed volume in here, and also see the visuals or the secondary metrics on the chart. And we can easily see that the highest call volume was this level here. And you also see by looking at the detailed volume and also the net volume. And the highest net put volume and single put volume was down here. The net volume also shows you this, and the detailed volume. So the biggest activity was at 6,500. So probably the market participants bought a lot of protective puts on the downside because the market was very weak yesterday. What we haven't talked about yet is the delta exposure, the DEX, that you can also enable or disable by the chart settings. And here, if we zoom out, you see that the highest negative DEX or delta exposure is at 7,000. and on the contrary, at 6,000, the highest positive delta exposure. These are very wide distribution, but you can also see that on the chart. But if you are zero-day trader or trading intraday, it doesn't matter for you if there is a high delta exposure at 7,000. It's way out of the money, so you don't need to pay attention on that. Now let's do another round of practice and look at Google. Right now what I'm selecting is the March 20th expiration tomorrow, and we are checking the 1 hour chart on Google. And what we can see here is that if we go through the 4 layer of thinking, that first, what is the volatility regime? We are above HVL, which usually means that there is a lower tendency for high volatility, and probably the moves are dampening. We are sitting right at the core transition zone. Above that, we are in a green positive gamma territory. And if the market goes above C1, I would look for C2 and C3. But again, these are not predictions. So if the market passes C1, it doesn't mean that the market will definitely go to C2. These are levels I have to watch. But if the market goes below HVL, I would look for higher volatility, or at least look for the reaction around the 305. So this is the volatility regime, and the second layer of thinking is where the GEX levels are. We have already identified C1, and the P1 is pretty far below the market price. So the protective puts, or the P1 area, is lower than the C1. So this is what is showing on this kind of a little bit bullish chart on the hourly time frame. If we go to 1 day or 4 hour, we can continue by analyzing the open interest or the positioning data. The absolute highest open interest is here at this line, the 310. So that's why it's also important to see it's not only the highest call, it's also the highest open interest, the highest absolute GEX, and the highest put volume. So I would think that if the market goes back to C1 or above C1, there might be a reaction. We don't know the reaction beforehand. The market can reject that area or accelerate further up. That's why it's important to see these lines and see these levels and reaction zones to understand where I need to pay attention. So based on the positioning data, the absolute highest open interest is at C1, and interestingly, the highest call open interest and net call open interest for this expiration is way out of the money at 380. Probably these are positions that were built previously in the previous weeks or months beforehand. And if the buyers are here, or if there are call buyers at 380, they will lose a lot of money, or they will lose tomorrow when the March 20 expiration goes out, because these are out of the money and pretty unlikely to the market hit that price level. And the highest put open interest and highest net put open interest is below the market price, 280. Probably these are protective puts, but we never know what is the exact positioning of the market participants are. So these are the important things in terms of positioning. And now I would look for the flow or the volume information. I can always go back to net OI and detail, net OI, but net volume and detailed volume if I want to see the exact distribution of the bars. So the net call volume and the call volume is here. So in terms of the volume, it was pretty big on the upside. This is a bullish setup on the 4-hour chart, but we are approaching this rejection zone, which also coincides with the call gamma levels. So we need to watch these levels and how the market reacts to that. And also it was a pretty high put volume in here. The highest put volume was here. If we look at the detailed volume bars, you can see that this red one, this red part here, is the highest one in terms of the distribution in here. And besides all the option metrics and GEX levels and gamma classification engine, what we always need to pay attention to is where the market sits currently in terms of the context. Right now, what we can see on the Google chart, that it's there was a double bottom, if we can say that here, or triple bottom in here. The market bounced back from the P1, And right now, this is kind of a neutral sideways market. But if we look at the long-term trend, it's a positive, it's a bullish. It's not as bullish as it was here, but it's still bullish. I wouldn't say it's bearish. So the first thing I would say if you analyze the market is to have a context, have a big picture where the underlying sits and how you can read the whole thing. For example, if you are a swing trader, it's very useful to see the all expiry data. These are very different levels than the current or very close expirations, because if we are changing or if we are using the cumulative GEX aggregates, this will aggregate all the option positioning, all the volume and all the GEX until this expiration, which has more than 1,000 days to go, I guess. And if I zoom out a little bit, what we can see is that based on all the expiry, so it's if we want to see it exactly, it's 1,002 days to expiration, so it's a lot in the future. We can see that the C1 is still around this area. So it doesn't matter if you watch the March 20 or every expiry, the C1 did not really change. C2 is way out of the money, and around the quote-unquote protective put areas around 280. And the highest call open interest, highest net call open interest is at 350, which is not surprising because that was the previous high. And the highest positioning in terms of the put open interest is on the downside at 280. So this is how you can understand the big picture if you zoom out on a daily time frame and if you analyze on every expiry. And whenever you are confused about the labels or levels, always click here, and this panel will show you the level analysis and also the zone context analysis with all the confluences. So this is how you can make sense of the market if you are, for example, a swing trader. And don't forget that we also have a side panel in here that I also covered in my previous recordings or videos, but I didn't want to focus on it right now because the main focus of this video is the charting view. So I purposefully hid it when I started the video. So it's not disappearing, it's not missing, I just hid the side panel. I know that this video is focused on the charting view itself, but for a moment I would like to focus on the GEX Live Table, which was the first GEX tool that we published on the web application. And here you can also see these kind of secondary metrics, obviously in a different format and different way that on the charting view. But on the settings in here, you can have all the same settings that we covered in the charting view section, which will help you understand the GEX table if you want to make sense of the secondary data in terms of the options metrics. So you can always enable, disable them, and you can also see these levels here with the heat map, with the zone coloring and all the rest that you have already seen on the charting view. So if you prefer the table view, you can also see the secondary metrics and all the relevant levels that we covered in here in the GEX Live Charting View application. So I think I have covered everything I wanted to talk about in this tutorial video. I know it can be a little bit daunting at first, but remember that you need to think about 4 layers: the volatility regime, the GEX levels, the positioning data, and the current flow, which is the volume. So I think that these 4 layers of thinking might be able to help you understand what you see on the chart and how to make sense of the different zones and levels. If you have any questions regarding this video or the concepts covered in here, just let me know. Thank you for your attention. Take care. Bye. Thanks for watching. If you haven't yet, please subscribe and check out our other videos. You can always find us at the links in the description. Trade safe out there.